Hello guys, welcome back to our end of the market update for this Tuesday, April the 20th of 2021. And what a day we had today. So we had the S&P and the Nasdaq pull back into our expected levels. I do believe that perhaps the market makers are watching our videos because, man, these levels have been met spot on, all right? And our members in the group have been calling these out as well. We've been using Elliott Wave to determine where each one of these levels are going to potentially hit, using also our Fibonacci retracement tools and extensions. All right, and so this is great to see a collaborative community coming together and bouncing ideas off one another to help each other out. And that's what a community is about, a growing community. So I do appreciate everybody in the group. Thank you so much for your participation. It's beautiful. Thank you again. So let's dive into the markets today. And actually, before I do, as always, hit the thumbs up and subscribe to the channel for when you get notified, so that when I upload these videos. And also, if you want to join our community, the Discord link is down in the description. It's totally free at the moment, so do please join. We love to see new faces, all right, and love to see new ideas brought to the table so we can discuss. All right, back to the market. So let's actually dive into let's do the triple Qs first, Nasdaq ETF. All right, so our wave count here suggested that off the March lows, we went up in wave 1 in the minor degree, sold off in 3 waves into the minor degree wave 2. We set this channel, right, that came from the minor degree wave 1 to wave 2, projected down to wave 2. We're now up in wave 1 of the minute degree, down in wave 2, ABC, sell off. Ramp up in wave 3. We had several gaps that I'm still concerned about, because at some point these gaps need to get filled. So once we completed wave 3, we sold off into A, B, and C. So this is where we currently stand. Okay, so coming into this morning, right, we were anticipating a pullback in 3-wave fashion. So we've got that right now, except that it came in at a shallow 23.6 retracement, which is valid. We're looking more something along the lines of the 38, perhaps down to the 50. If I turn these on, we'll know that level. So perhaps down to the 50, which would have been around this gap, all right? And that would have been, I guess, better, right? Because also we would be falling at the support level of wave 1, support level here at the highs of March. All right, in this wave B, all right, because this was down in A, up in B, and down in C to complete wave 2. So ideally, I would have loved to see that, so that it would have given us a further confirmation that we will go higher. But given that that wasn't the case today, so what we have on our table is that we came in shy, or we came in short, I should say, or shallow at the 23.6. All right, that's still very valid in the Elliott wave standpoint using fib levels. All right, so down in A, up in B, 1, 2, and 3, down in C, sorry. All right, so what's going to happen? What do we expect? Now, say we hold this level support, which is what we were looking for today. We're looking for a close above these levels, so in the S&P and also in the Nasdaq. A close above these levels would potentially signal and open the door for our upside target area, which in the Nasdaq or triple Qs, it's at 351.17, which is the 1618 extension of wave 1 projected down to wave 2. The 61.8 golden pocket is the wave 2, or the start of wave 3 projected down to the potential finish of wave 4, if this was it. All right, so as we discussed in yesterday's video, we saw that we're now looking at a fib cluster of these two levels from these 2 degrees. All right, guys, so that is what, and also, it comes into the middle channel, or the middle line of the trend channel. So that kind of confirms that this could be a good level of resistance for the wave 3. I mean, not to say that we could probably continue higher, but we will take it one wave at a time. All right, at which point, once we see this complete, we're going to potentially see this draw now wave 4, right? That should square up to this wave 2. So ideally, we want to see from the Elliott wave perspective, we want to see wave 4s or corrections always pair up to their corrections of the same degree. So potentially we'll see something around here, and then another leg higher into the wave 5 to complete intermediate wave degree, wave 3, and then the long drawn out correction in the wave 4 for the summer consolidation months. All right, guys. So that's what I am anticipating for it to happen this week. Excuse me. So I apologize for that. So I do anticipate that for coming into this week, potentially if this was the end, we would ramp up higher. So jumping over to the SPY. Okay, I have two counts that I want to review with you guys today. So this is the first count, assuming that this is the end of wave 4, right? Since we closed above the previous wave 4 of the lesser degree. So reviewing the wave count from the March lows up into wave 1 of the minor degree, ABC into wave 2, we go up in wave 3. We're now selling off in 3 waves. All right, guys. So this is down in A, up in B, down in C. So as you know, C came 100% extension of wave A. All right, and it came right at support level of the previous wave 4. Now we were anticipating, we called it out in the group that if we hold support at this level and we close higher, right? First of all, in the morning that's what we called for. All right, we wanted to see a drawdown into that area and hold it as potential support, and that's what we have so far. Okay, we have 2 areas where that's the 100% extension of wave 1 compared to wave C. We have the previous wave 4 as support. Now this is a little bit of a shallow support in the higher degree, right? Because we're coming in at the 23.6, which was supposed to be a 409. All right, that concerns me a little bit. So say for instance this is the end of wave 4 in the minute degree, then it's no doubt that by tomorrow or the following few days we're going to see this go up higher. All right, the alternate count falls like this, right? And this is one of our members is pointing this out, so let's review this. So the wave count suggests similar interpretation in the price structure here, with the exception that we are looking at this as instead of wave C finishing here or wave 4 finishing here, this was the end of wave A. All right, we're not going to go up and higher in the wave B, which we will see a resistance. So comparing both wave counts, if I may go back here, all right, comparing both wave counts, all right, the 416 level, right, in our let me delete this for a second, in our most bullish interpretation, right, suggests that if we go on higher, we should see some sort of resistance, right, and then turn on lower, which at that point we will direct our attention to this wave count, where we see the 78.6, which is the retracement of wave A compared to wave B, and that comes in at 416, and then we're going to see another leg lower into the wave C of wave 4. All right, so that is what we're looking at, and that falls in line with what we're referring to. So say for instance, right, this is what we were looking at before in our previous videos. So if this is the hypothetical or the theoretical finish of wave B of this degree, right, then a 100% extension will fall in line with the upper trend channel, right? It will also come in line with the previous wave 4. All right, so that's also valid from an early wave standpoint. That's not out of the question. So as I mentioned, it's always good to have several wave counts on the table so that we can always adjust and direct ourselves to what's happening in the markets. Okay, because if you just have one wave count, it's not ideal, but having 2 or multiple wave counts that interpret different directions or different interpretations of what's going to happen, it's always healthy, so that you could give yourself some wiggle room, or you can strategize as to how you're going to take on trades. All right, guys, so again, we're going to wait to see what happens at these levels at the 416. We'll know relatively soon. Once we start, if coming into tomorrow and Thursday and Friday we continue pushing on higher, the 416 level is something that we'll keep on watch. If we do end up going higher than that and we break the previous high, then it's off to the races, and we're likely to see the 430s or 420s to 430s levels on the S&P or the SPY ETF. All right, guys, so I'm gonna leave it like that for tonight. Netflix reported today it had I think like a 10% pullback, right, because it reported a slow in its subscriptions for last quarter. So that's not really good for the company and for the stock itself. So as I was mentioning in yesterday's video, that's something we need to keep our eyes open for, how tech reports. All right, so it's currently down to I think 490 from 520ish, I believe is where it finished. All right, so yeah, I don't think I have anything else on the notes. Let me see. No, that's pretty much it. Okay, so all right, I'll see you guys tomorrow, and have a good night. Take care. Bye.